In this video, we want to talk about SOFI Technologies, and they report their earnings later this month, to be exact on July 30th. And if analyst predictions are correct, the fintech stock could be a late 2024 breakout sensation, as it offers investors exposure to both fintech and AI markets. Now, before we get into the charts, I do want to get into this article, and it is coming from Investor Place. So it's been a difficult month for SOFI Technologies, but things may be about to shift in a new direction. The fintech startup is preparing to report their earnings for the second quarter, again on July 30th. And again, if the upcoming earnings report shows growth on any key metrics, shares could start the rebound for which they are due. Now, as a stock, SOFI is somewhat unique. While it enjoys meme stock status, it isn't the only retail investors who seems enthusiastic about it. Popular CNBC host Jim Cramer recently stated that he would wait for the stock, but others have expressed more bullish takes. Another investor, he comes from Investor Place Markets. He said analysts expect the company to notch a 60% increase in revenues and flip from a negative 5 cents per share to a positive 1 cent per share. Company has been riding a wave of higher interest rates, which raises net interest income. And at $6.54 per share, it trades at a low enough levels that traders who don't mind some risk may see it as a tempting opportunity to stock up on a future winner. Right now, investors are hungry for AI stocks that haven't yet begun to reach their full potential. SOFI sits right at the center, and if Wall Street is correct, the July 30 earnings call will be a catalyst. It needs to usher in a long overdue turnaround. So, going back to the charts, this is the daily chart, and as you can see, price is pretty much hovering below all the moving averages. This is the 200-day moving average in yellow, the 100-day moving average in white, and the red represents the 50-day moving average. You can see we had a def cross. That's where the 50 crosses over and under the 200 back in March. And again, as I said, price is now basing at that key support resistance band at $6.50. Now, I had expected the stock to pop, and we did get that. We got a false breakout to the downside. Again, price fell into this support band, moved prices higher, but again, your moving averages are slowly pointing down, which means that there's still downside pressure. And currently, if you just map out the pivot lows and pivot highs, what you will see is we have not broken this downward trend yet. So what we can see is price basing for the next several weeks. To get a better picture of that band, I'm going to just move out to the weekly chart. Now, the best levels really to buy, it's going to be lower. Let's zoom out to the monthly chart. If you happen to get a sell-off on earnings, back up the dump truck, as you do have monthly buys at $4.50. This level worked once and definitely could work a second time based on the size. Thanks for watching. Subscribe. Please like the video.